Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. An off-price retailer and a uniform company are this week's growth and income stock picks, as highlighted now by Todd Bunton, our growth and income stock strategist here at Zacks.com. That off-price retailer is ROST Stores.
Yes.
What does off-price mean?
Well, it's a term that they use.
They have weird pricing? Is that what they mean?
It means lower prices on name brand merchandise. So say a retailer, a full price retailer like Macy's, maybe has overstock, they have clearance items. Well, a company like ROST Stores will come in and buy that merchandise at a discount, and then they'll sell it to their customers at a discount while still maintaining healthy profit margins. So you can imagine this business model has been really profitable over the last couple of years. The company actually expanded throughout the Great Recession. As I brought the price and consensus chart here, you can see over the last 5 years, consensus earnings estimates actually improved during the Great Recession. While most other companies saw huge declines, the company had stable earnings estimates, and actually they've still been growing as we've been technically out of a recession. Well, as consumers will tell you, it doesn't feel like it because they still have employment north of 9%, rising prices, stagnant wages, falling home prices. So you're starting to see a shift in the U.S. consumer to bargain hunting, and you're seeing that at companies like ROST Stores. TJ Maxx is another. And
I think you've probably been seeing that for a while here.
You have, yeah, since about 2008.
Yeah.
Once people's home prices stopped going up, and they realized that maybe their job's not as secure as they thought, hey, they're going to look for good values, and you can get a good value at ROST Stores, and investors can get a good value too. The stock has been actually holding up fairly well during the recent market carnage, and analysts are expecting strong growth to continue over the next couple years. Based on consensus estimates, they're looking at about 17% earnings per share growth this year, 12% growth next year, and investors also get a dividend that pays about 1.2%. Now the company's increased that at 25% a year since the year 2000, so that's moving higher. Yeah. I'd expect more dividend increases along the way. And like I said, investors see a good value here. The stock trades about 14 times forward earnings. That's a discount to the industry average of 16 times. PEG ratio right around 1, so a lot to like here.
Okay. Cintas Corporation is that uniform company that I alluded to, CTAS, the ticker symbol. Now, this company's been around for a long time.
Yeah, founded in 1968, based out of Cincinnati, Ohio. About 70% of their business is uniform rentals. They'll also sell uniforms to companies too, but they'll also do other stuff, entrance mats, restroom supplies, first aid, safety kits, stuff like that. But yes, I'd say the bread and butter of their business is still the uniform rentals. And as you can imagine, with employment stagnant, how are they able to grow in the U.S. if there's no new employees to give uniforms to? How are they growing? Well, they're growing through organic growth. They're growing through they're taking market share from competitors, and they're also expanding through getting companies, maybe probably smaller companies who have never had a uniform rental service company before. They've been getting in there and getting the sales there, so that's actually been driving sales and profits. So the company's delivered 6 consecutive positive earnings surprises despite a difficult environment for them. As you can see on the price and consensus chart, the company reported a very solid positive earnings surprise in the second quarter. Consensus estimates jumped after that. That drove the stock to a Zacks number 2 rank buy. And analysts expect the strong growth to continue. Based on consensus estimates, they're looking at about 20% earnings per share growth this year, 12% next. So you're getting growth and you're also getting income. They pay a dividend that yields about 1.8%, and they've increased that every year since 1991. So very solid, stable dividend, and the stock is trading at a very reasonable price. Trade about 13 times forward earnings. Historically, it trades about 18 times, so it's a discount to that, so there's a lot of value here as well.
Do you own either one of these?
I do not.
All right, check out other stock pick suggestions on our homepage, Zacks.com, where we put 4 new stock pick ideas up for you daily in each of the investing categories that we write about, and Todd's is included in that mix. With Todd Bunton, I'm Terry Ruffalo.